Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Jeremy Yea, Senior Valuations Editor at CAP HPI, joining us for his roundup of how trade values performed in December as seasonal trends kick in and over the course of 2024. So welcome back to the pod, Jeremy.
Thanks a lot, Curtis. Merry Christmas, everyone.
Merry Christmas to you. I should imagine it's been a busy few days trying to pull things together in time for the last editorial of the year.
Absolutely. Always a busy time at any deadline point, but bringing it forward a little bit probably, I guess, narrows your window. But it is, it's been a busy time again.
Just I know how you feel. It's just trying to get that, pull it forward, get it all done before everyone starts to get the holidays and break up for Christmas. But fantastic having you back on and for this final one of the 2024 and look forward to 2025 with you, Jeremy, going forward. So we'll get on with it. So obviously now always start off with talking through, the headline trade values for the 3 year 60 point and how they compare to previous Decembers, and what has been the final figure for December as we move into the January of 2025.
So a 3 year 60, the book, the overall guide is finished at 1.5% down, which is roughly £250-260 overall, which has been a really strong month considering in line with seasonal expectation, a strong year, a strong month. And seasonal average is a 1.3% drop. So we're just ahead of the average. But if you look at previous Decembers into January monthlies, last year, I think everyone remember last year, that was a 2.1% drop, but that was off the back of two 4.2 drops in a row. So the last quarter of last year was, particularly difficult, 10.5% drop overall, and a sharp realignment to the market. We're going back to previous years. In 2023, it dropped 1.5%. 2022, it dropped 1.4%. 2021, it dropped 1.4%. I think, interestingly, 2020, it only dropped 0.2%. But we all know what happened in 2020. Just a month or two after that. So it's been in line with seasonal expectation.
And it is interesting now that for a while, we always compared back to 2019, didn't we? It was always the pre-pandemic, but I think the market's kind of moving on past that now. That we're in a new market, a new space. So kind of comparing back to sort of 21, 22 is more probably relative than looking pre-pandemic years now, isn't it?
Definitely, I think obviously the drop in 21 before we got to sort of around, the summertime or, just post Easter time when obviously prices went crazy and that unprecedented, rise. But it feels very, very normal. Even if you go back pre-COVID, this latest movement is in line with those previous years. So, it feels very, I guess, post-COVID seasonal normal. The market definitely feels more normalized and dare I say it sort of, sometimes a bit more predictable. Hopefully.
Yes, hopefully. And I mean, conscious it's a very short month because of the deadline and early, but has it been fairly flat through the month, or have you seen a bit of fluctuation as the months progressed, after the previous deadline at the end of November? How has the month performed? Has it sort of had any fluctuation throughout the month in live?
Well, it almost feels a bit similar to November in terms of steady drop. I think the beginning of the month probably felt a little bit tougher, if I'm being honest. I think maybe the first 7 to 10 days maybe felt like it could potentially go a little bit more than the 1.5, but it did start to flatten out a little bit. But there's people out of the market. There's buyers who are have gone on holiday already. Some got some large dealer groups or some large car supermarkets have dipped out, but some have stayed in the market. So it's been, been really interesting to hear and to see, who's still active and who's not. But it's not been, it's just been a steady December deflation. Like I said earlier, it's nothing untoward at all.
And how's that? How I mean, obviously we talk about December into January, but it's kind of a whole year now. How does,
Yeah.
in terms of the market in general over that full year of 2024, how do you think it's performed?
It's been a strong year, like I said. It's broadly flat from January to December. If we're looking at the months, we're making the live movements. It's broadly flat over the course of the year. Now, if you take, put that into context, a normal deflation year is between 3 and 5%. I think this is the fourth strongest year we've got on record since, Cap Live was introduced back in 2012. So, and then you've got the extremes of, 2018, which was year of the used car. I think that went up, almost, I think it was 1.7 and 1.8%. And then obviously you've got 2021 where values rose nearly 30%. So, to be the fourth strongest year on record based on the sharp realignment of back in the last year, I think it's been really good.
And Jeremy, looking at age bands, did you spot any notable trends in December?
Age bands are, I suppose, a little bit interesting. I think a 1 year 10K, it dropped 1.3%. And that's about £375. And I think if you think about maybe some activity by some OEMs in terms of some I guess, pre-reg activity, we've seen some late plate vehicles come back to the market through maybe some rental recycles and what have you. So 1.3% is actually probably broadly in line with the rest of the years. So again, it's within line with probably our expectation. There are some moves in there. There are some late plate vehicles which have gone down, a little bit more than the average. If we go to 5 year 80, that's down 1.6. So broadly in line with 3 years. And then you look at 10 years and it's down 1.7%. So everything's in line with each other. It's just a steady deflation against all age points.
Yeah. And how did the various vehicle sectors perform? I mean, I did notice it wasn't a particularly good month for city cars and super minis, certainly in terms of percentage drops, was it?
No, city car dropped at 3 years. That dropped 2.4%. And that's roughly about £190. So, it's in terms of pound notes, it's a small percentage over a small pound note value, if you like. Super mini dropped 2.3%. Which is about 250 quid to £260. So again, bang in line with the overall average. SUVs, obviously the largest sector in terms of the volume that we receive, or the market has anyway, that dropped 1.6, is slightly ahead of the average, and that's down almost £300. But again, in line with expectation, there are some which have moved a bit heavier than that, and there's some which have, some of them have actually increased in value. So, but the average is, like I said, 1.6%. So yeah, pretty good.
And any notable winners or losers by model? Because I did actually notice that it was a strong month for convertibles and cabriolets, especially the MX-5. So is this people now buying early for the summer, or dealers stocking early for the summer?
Yeah, that's a really interesting one. I think, to be fair, there's not very many vehicles within that 3 year sector for coupe cabriolet. It's been a dying sector for obvious reasons over the course of the last few years. It does stand out. It's the only one in black, if you like, on our report, which is showing a slight increase at nearly 1% at 3 years. But there's, in terms of notable movers, Peugeot 308 that went down nearly 6%. That's just over £1,000. Mercedes EQA, the electric vehicle, that went down 5.5%, or £1,175. Then we've got a Mocha diesel. That went down 5% and just over £700. But on the other side of that, we've got some vehicles which have increased. So we've got DS3 crossback diesel that went 6.5%. Then we've got Kia Stonic diesel that went up 5%, and a Mazda MX-5, to your point just now, not a coupe, but a true convertible that went up 3%. So seasonality maybe doesn't exist so much with some of the convertibles and coupe cabriolets now.
And Jeremy, I mean, we can't go on without talking about fuel type. I mean, what trends did you see across petrol, diesel, plug-in hybrid, and BEVs for the month? What notable shifts have you seen there?
So BEVs are actually our second highest performing fuel type, over at 1.4%. The strongest fuel types are diesel and hybrid, so normal hybrid, self-charging hybrid, as one manufacturer has labelled them, only down 1.2%, so well below the average. Electric vehicles have been performing really well. most of the year, certainly from the second half of the year anyway. They seem to have plateaued, and that seems to continue. There are some variations with that, but again, a really solid month, and it's a relief to see them broadly falling in line with other fuel types now as they become more normalised, I guess, within the market. Petrol's the worst performing fuel type. That was down 1.8. I think that's probably more volume orientated, where we're seeing volume of high volumes of petrol vehicles. I think that that they're coming under pressure, and that's driven that number down probably a little bit further than the average.
And I mean, obviously, we're touching on the battery electric vehicles overall, and thinking about what happened in 2023 compared to sort of 2024. And I think you touched on it there. There has been this shift now, aren't there? Some of them now starting to look good value. The retailers are starting to understand the product a little bit more now. They're seeing where the price parity, or actually where they do sit kind of cheaply or good value against their ICE counterparts, don't they?
Definitely. I mean, that's a continuation. We're seeing, I think the sweet spot is between 15 and 20 grand. I think even underneath that for a BEV vehicle, I think they're selling really quickly still. So, in the trade arena and retail, to be fair. So, they have become more normalised, and I think there are more and more dealers who are, trying to, I guess, tap into that market in terms of, they may have done before, got burnt obviously through the drops of 2022 and 2023. But they've come back and they look extremely good value, like you say, against some of the ICE counterparts, especially against petrol. It's still, £2,000, £3,000, £4,000, £5,000 round the other way, where an EV is cheaper than a petrol. So yeah, they do look extremely good value.
Yeah, definitely. Well, we'll be back with more from CAP HPI's December and the full year used car market analysis after this short break.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Jeremy, each month you analyse retail activity by days to sell. How did they perform over the course of December?
Still really well. I think there has been some dealers, independent supermarkets, franchise. We've still been selling, a good amount of vehicles for December. In relative terms, and for December, it's still been pretty good. There's been a slight increase in the overall days to sell, which isn't hardly surprising in the build up to the festive period. But BEVs continue to be the fastest selling fuel type at 37 days. I think it was 35 last month, so a couple of days increase. Hybrids down at 41 days, which is, again, probably a slight increase over previous months. Plug-in hybrids, 42 days, and petrol and diesel. Petrol's at 43 days, and diesel's at 44. So by far, I said by a good few days anyway, BEVs continue to sell much quicker, even in December, which is good.
And you also polled the views of the auction houses. What were they telling you about stock levels? I know you said earlier about there was a certain amount of activity amongst the car supermarkets, but overall, what were they telling you about stock levels and demand compared to November?
So stock levels have been falling. They've been falling for the last couple of months. I think, we've still got this lack of supply at sort of 3 to 5 and maybe a little bit older age points now. We're almost 5 years away from COVID. So it doesn't surprise you to hear that, stock levels have been falling. I think there's been some tactical sort of, from some vendors, the later we've got into December, to try and hold some more vehicles back for January, because January potentially could be a little bit stronger. But yeah, it's in terms of stock levels are either, I think 50% said that they've decreased, and almost half said they're about the same. So, we are seeing a month-on-month decrease across the market, which is, again, quite normal for the time of year. In terms of demand, I think demand has decreased, but for 50% of the auctions that we surveyed, 50% are saying it's about the same, but the other half roughly have said it has fallen away. So, and I think based on it, against November, there was just over 60% who said it was about the same. So there has been, the auction survey probably indicates that there has been a few more which have dipped out of the market.
Yeah, a bit of a slight slowing, and it's just, they say, as you said earlier, it's this time of the year, and it's not unexpected for this time of the year, is it? Really, I think there's the sort of focus tends to switch into the new year now, which is what I want to talk to you about next, Jeremy. So in terms of CAP HPI's view on the year ahead and as we move into 2025, and you talked earlier about it being a fairly flat year, that car at day one in January of 2024 being probably worth similar price in sort of the last day of the year. What's your view as we move into 2025 now? I mean, what's your expectations over values as we move forward?
So start with January. I think January is going to be pretty much, more of the same in terms of stability. I think prices are going to be stronger than in December. I think that's pretty obvious to state, along with conversion rates for vendors. And I think retail demand will kick on as well. We'll see an increase there. And January always brings sort of new life to the market, where it sort of goes a little bit quiet, or quite a lot quiet through December. So our outlook is, we think that January is going to be strong. I think normal movements in January to lead into February, but January CAP live movements. We think from start to finish, it's probably going to be in and around flat. It wouldn't surprise us. It's going to be a little bit stronger. I think the average is about 0.2 down since we've introduced CAP live, but we think it's probably going to be flat, but a little bit stronger than that. So maybe flat, or maybe even end up in a positive based on, I guess, consumer demand, because everyone's activity will, people who are looking to buy cars tend to do it between Christmas and maybe New Year if they're a bit bored or whatever, and then they go out and hopefully buy in January. So it's very optimistic, and most of the dealers, auctions, everyone's on the same page in terms of we think that they think January is going to be pretty good, and everyone's pretty optimistic, and we don't see anything different to that. Again, supply led as well as demand led. So there's not going to be a massive supply coming through in January and potentially up to the plate change. So we think it's going to be a strong Q1 to the year for sure.
Yeah, and I think you touched on it earlier that not everybody's been out buying heavily, have they, for the first quarter that they may have done in previous years. So there's still a lot of large groups, large supermarkets, etc., that won't be running at full stock levels, will they? So if they all come out in January fairly early to start to fill the stock up, then it could, like you say, drive some heavy demand, couldn't it?
Definitely. I think early January, I think once we get past the first week or the first full working week, then I think things will probably gain a little bit of momentum. But we might see people come straight out the gates as soon as they can and start buying. There's lots of auctions now which operate between Christmas and New Year. There's lots of sales, whether that's online. There's opportunities to buy cars in between, and certainly now probably more opportunities to buy cars than there have been in previous years, certainly pre-COVID times anyway. So I think there's going to be a good bit of activity in between that period of Christmas and New Year, and definitely beyond. But some strategies, people have wound stock back and wanted to go in. We've got to remember that interest rates are still high. They've been held again the other day. The stock of costing of holding vehicles is expensive still. So you can see why I think that dealer strategy could be to go out and buy in January. Prices will be stronger, but hopefully there'll be more demand there.
Yeah, no, I couldn't agree more. I mean, huge thank you, and I say I think that airs a voice of confidence in the marketplace. I think which is what's needed. I think we're in to your point earlier, fairly stable market at the minute in terms of supply, demand, and values, which is positive considering what we've had over the years. So I mean, a huge thank you for your time, Jeremy, throughout 2024, and obviously supporting us in 2025. And I know that the listeners really do enjoy this kind of a more behind the scenes, a little bit more devil in the detail conversation around what's happening in the market, particularly around the editorial and the values. So a huge thank you for coming on today, Jeremy.
No problem at all. It's I enjoy coming on and talking about the market. So yeah, thank you, and Merry Christmas to all the listeners, and Happy New Year, and speak to you through the pod next year.
No, same to you. So as I say, this is an early insight into the editorial. The full editorial will be published on the 27th of December. So keep your eye out for that through the social channels of Jeremy and Chris Plum and the others at CAP HPI there. But that's it for that. So thank you for everything, Jeremy.
Pleasure. Thank you.
Thank you very much, Jeremy. That's all for this special weekday Motor Trade podcast. Many thanks once again to Jeremy for joining us, and thanks for listening. Final pod of the year. It's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.